Hello everyone, welcome back to Small Talk. I am going to discuss few things which we are looking forward to as far as the market is concerned. I know it's been a very roller coaster kind of week. It's been very choppy market. Lots of volatility took place in the market, and there were of course multiple reasons, and rightfully so. I'm going to talk about first thing which is going to take place tomorrow morning, Friday, December 10th. We have job reports coming up. This job report is going to determine whether we have what kind of labor market we are headed towards. And the economist expectation is 155,000 jobs, a step down from surprising 227,000 increase in November. Goldman Sachs estimate that payroll growth will come in at just 125,000, with the unemployment rate drifting up to 4.3%. This report will provide only limited clarity on where the labor market is headed. However, it is very crucial and important. Thursday, the market was closed, which was today. Tomorrow, if you wake up to bad job data, that is going to affect the market significantly. However, I don't think the job report is going to, of course, it's going to affect the market, but not to the extent if the CPI release comes, higher than expected or harder than expected, which it did last month. CPI release is on January 15th. Usually they report the CPI at 8:30 a.m. Eastern Standard Time. Market analysts anticipate that the December report will show a continuation of November CPI trend with the projected annual inflation rate of 2.7%. The analysts' expectations suggest that inflation is stabilizing near the Federal Reserve's target rate, which may influence the future monetary policy decisions. Once Jerome Powell looks at these reports, of course, he's going to decide whether he's going to do one rate cut, two rate cuts, three rate cuts, or no rate cuts, depending on the CPI report, of course. It's very crucial because for the past two CPI reports, of course, the data has been coming up a little bit warmer than expected, but the inflation is slowing down. The pace is kind of slowing down, but not to the extent that Federal Reserve is expecting, which in my opinion, I think they're being pretty stupid stuff. In my opinion, inflation is up and over, and we should declare victory that we have landed softly. But I know Fed Chair Jerome Powell is not going to do that. They are obviously very cautious at this point because they have made a blunder previously when in the name of quantitative easing, when they were printing money and distributing all these checks to everybody, which had extra inflow of money in the economy, and everything just became super expensive. It caused lots of inflation. So this time, I guess they're being overly cautious, which they should know by now that inflation has been pretty stable lately. But that's just my opinion. I'm obviously not an economist. I'm just a person sitting at the YouTube making a YouTube video. Next thing I want to talk about, of course, Tesla. Tesla earnings is scheduled for January 29th after the market close. The stock market analyst expectation is, I wrote the numbers down. Earnings anticipate earning per share of approximately $0.65, reflecting a 14% increase from the same quarter previous year. So they expected that Tesla improved 14% from last year, the same quarter. That's what the expectation is. Last quarter, it came at 0.72, surprisingly, surprising the consensus estimate of 0.58. So last quarter was, of course, amazing. When they announced their earning, the Tesla stock blew up because the expectation was 0.58 earning per share, but Elon Musk announced that they had earned like $0.72 earning per share. Investors will closely, though, monitor the upcoming report for insights into Tesla's financials, financial performance and future outlook. Because once they get this report, it's going to tell them how well Tesla is performing and what the future looks like. And that's going to determine the fate of the Tesla stock, which direction Tesla is going to move. But we have, a couple of weeks left before we get to that point. Tomorrow is a very important day because it's obviously the labor market data or job report is coming out. I have a thesis though. I feel like, the next thing I wanted to talk about was tariff. I know Donald Trump has been talking about tariff, that he's going to impose tariff on Canada and China, which is why the market is very scared. They have market is facing lots of uncertainty and don't know which direction to move to. I have a thesis though. I feel like if Donald Trump talks about tariff and as a result the market is collapsing, he probably will not impose tariff. We know, as goofy as he is, because that's going to nullify his own thesis. He ran the election, he ran the campaign saying that he will improve economy, improve the stock market, overcome inflation. He's pro-tech, pro-economy, pro-stock market and all that stuff. So if the stock market is collapsing, that's going to affect the inflation. And if he puts tariff on the trade, that of course is going to put more pressure on the everyday consumer. Prices are going to go up, which is going to cause inflation. And if inflation goes higher, there's going to be, no rate cuts, or maybe, Federal Reserve tightening even more, which is going to have an impact on the stock market, which destroys his entire campaign and his logic that this is what he's going to do and improve the country. So he may not even impose tariff, but again, who knows? When I look at, if you guys recall in 2017 when Trump was elected, the first year of his him being the president, the stock market was rallying, and then he started talking about tariff, and there was a slump in the stock market. You can go back and check the data, and you will see where the stock market was just going parabolic, and then it just dropped because he was talking about tariffs. But this Trump 2.0 is getting into the office talking about tariff from day one, which is why the stock market is quite scared. So there are lots of uncertainty in the market, and markets don't like uncertainty. People don't like to put their money in the stock market. However, I think in 2025, my personal opinion, not a personalized financial advice, 2025 is going to be a bull market. I'm very enthusiastic for tech. Of course, AI is like very much in fashion right now. It's very early in its age, and of course it's going to take some time for it to develop, and there's lots of room for the AI stocks to run, which is going to have an impact on the stock market as well. So my opinion, the stock market is definitely a bull market in 2025. Maybe the first half or first quarter of the 2025 is going to be a little choppy, and then it gets better as we move forward. Tech, however, is going to grow, but maybe not at the rate it was growing last year. 2024, tech grew so high. NVDA itself went up like 160%, I believe it was. Tesla, 65% in 2024. Some of the other big names, the Mega 7, they all grew a lot, except for Apple. Apple growth was only 30%, but again, Apple is a very steady company. Just like the way the growth is slower, if stock market drops, the drop is going to be not as significant as it would be with Tesla and some of the other big names, because Tesla was more like a momentum stock. It's, yeah, the fundamentals of course don't make sense where the valuation is right now. It's very highly valued. The valuation is priced in five years from now, pretty much, or at least 2 years from now. So current valuation does not make any sense, but it's a momentum stock. People love Elon Musk. People trust him. The trust is there. For example, I'll give you a small example. NVDA is very famous stock. Everybody is in NVIDIA or want to own NVIDIA stocks. The CEO announced wonderful earnings and the stock collapses. Elon Musk come and he announces earnings and he gives an outlook for the future, and stocks skyrocket. That means people trust him. People put their money in trust to Elon Musk's word. He is the charm of the century, I would say. And that's why you never lose on Tesla, no matter which direction the market is going. Just there has been a couple years of sideways for Tesla, but I think that time is over now because there's a lot going on in the pipeline for Tesla this year. Of course, everybody is looking forward to Trump taking over the office and see what announcements he makes as far as the regulations is concerned, and then tariff, depending on what he decides when in regards to tariffs on trades. Of course, people are looking forward to the new, I think Model Q that's what they call it now, new Model Q Tesla that they announced, which is under $30,000 vehicle. That is going to be a huge market. And then full self-driving, of course. Elon Musk has announced that that in 2025, full self-driving is going to be more secure than the human driver. But if you look at Waymo, they are already claiming that their full self-driving is already more secure and safe than the human driving. So Tesla has humanoid robots, full self-driving, the new Model Q in the pipeline, the regulatory restrictions or not by Donald Trump. Tesla is going to benefit from all of this. That's going to add another $1 trillion into the Tesla's market cap. So people have a lot to look up to, and I think you never lose if you're invested in Tesla. I don't own Tesla car, but I own lots of Tesla shares. So I know my opinion is not biased. I know the last delivery, vehicle delivery it sucked and didn't do a good job. But as far as the earnings is concerned, I think Tesla is going to do just fine. It's going to be okay. Similarly, I expect that maybe I don't know, because January CPI report reflects December's data. So it's 1 month behind, obviously. I think, hopefully, I'm like 50-50 that there may be, the CPI data is going to be as expected, or maybe a little bit warmer, but I think going forward, I think the data is going to cool off, and hopefully at some point in 2025, Jerome Powell is going to declare victory, and he's going to declare that we have landed softly and inflation is under control. Let's see which direction it goes. Let's see whose thesis is correct. Me personally, I'm still holding Tesla. I am waiting. Maybe I have hopes that maybe by May or June, Tesla stock will go to where I was expecting it to go to, over $600 level, and then I will start taking profit at 615, because my idea is that most of the hedge funds and ETF managers will take profits at that point around $615, $616 level. NVDA, let's talk about NVDA. Boy, oh boy, what kind of run NVDA has been giving us. It announced wonderful earnings, and NVIDIA shares just drop. Then the CEO speaks, I think it was yesterday? No, sorry, it was Tuesday, I believe, if I remember it correctly. The NVIDIA stock was going up in anticipation of what he has to say. He made the announcement, everything he said was good. He introduced a new chip, and stock drops again. And then he opened up his mouth and he said some stuff about quantum computing, and saying that that there's 15 years to 30 years time frame before quantum computing is fully utilized. And that obviously crashed the entire quantum computing stock market. All the stocks went down anywhere between 60% to 30 to 20% that one day, which is, to me, shows that what kind of lunatics are investing in the stock market. Sure, I understand that. Maybe he's right to some extent, that to fully utilize quantum computing, it might take 15 to 30 years, but some of the companies are already utilizing and they are establishing relationships with some of the other big companies and financial institutions, and they're making money. They may not be in profit, but they are bringing revenue by utilizing their services. So I don't know, I'm not very equipped with quantum computing and how the system works. That's a video for my husband if he ever decides to make one. But from what I understand, the few articles that I've read and the few analysts that I have listened to, it seems to me like market just overreacted to the statement that NVDA CEO has made. Anyways, what to expect going into Friday and next week? Tomorrow, obviously, it's going to be decided which direction the market goes depending on the job report. I'm hoping the job report is as expected and it's not bad. But if there's a little bit of a difference, market will probably still brush it off and shrug it off, and it will go higher. Then the next big report is next week, December 15th, which is the CPI report. That is also going to make a huge impact on the stock market. So many shares, I mean, the big tech has been holding the stock market up, and I think the trend is shifting towards mid cap to small cap now. I have owned some of the stocks from 2020 and 2021 when I was stupid. And those were small cap stocks. I didn't realize that small caps just fluctuate so much. So once you make a certain amount of money, you should just get out of them. I thought they just gonna keep going up. So I held on to them and I lost all the gains, but I never sold them. And I see that all those stocks are going up 20, 30, 40% on daily basis. But I'm so down on those stocks that I'm still not in green. So I'm just thinking about adding some more shares and dollar cost average or my cost basis to bring them lower so I can go in green and then finally sell them. But the point I was trying to make is that all those stocks are recovering now gradually. So of course they're not going to recover overnight because I bought them at a little higher price and now they dropped so much, and some of the companies have reverse split, which puts so much pressure on the stock, and then it's like you're never going to recover that money. But all of them are coming back gradually. So many of my stocks are turning green now, not in one day or 1 month, but it's taking them time, but they are. So it seems to me like that the trend is shifting from mega cap to mid cap and small cap. So just keep an eye. And then some of the penny stocks that have been just skyrocketing, as I told you for the last 2 weeks, a friend of mine, she does day trading and she kind of got me into it. So I don't put too much money in day trading, but some of the penny stocks, I buy them. And there are days when they make 40-50% profit in one day. So I only invest like $1,000 or $500 just to play it, just to kind of get a hang of it, because I don't like to do day trading. I think that's it's not a very healthy lifestyle. You just have to sit there and monitor and see which direction stocks are going and play it every day. That's a little too much for me. But I have been doing it just to give my friend a company. Fubo TV, we played last week. Of course, there was a huge news that Fubo TV has partnered with Disney, and Disney is going to own 70% of the sports network. And the stock went up 300% in one day. We didn't get in the very early after the news released. The news was released right in front of me. I was reading at it, but I guess I didn't understand the significance of how much impact that's going to have, so I didn't buy into the stock. And then I suddenly realized that, oh my God, it's going up. So I bought at, I think, $2.50 per share, and it went all the way up to $6.50. My friend sold out, but I'm still holding them because I think it's gonna go much higher. So that was a very good play for me. It wasn't a day trade, but it's going to be more like a swing trade for me. But for her, it was a day trade. She just gets in and gets out. She's very disciplined like that because she just gets very scared and excited when she sees few pennies that she's earned. But anyways, so there's nothing wrong with playing those small cap penny stocks if you know what you're doing and you know that you're disciplined, you're not too greedy, because if you hold them long term, they are going to crash on you and then you're going to be a bag holder and who knows how long you'll have to hold that bag or maybe take loss. I have taken $20,000 loss last year because some of my stocks, they were penny stocks and they were dead. But it kind of worked out for me because we had earned some profit for some of the other stocks, so it kind of offset the capital gain and it kind of became valuable for me. But that may not be the case for everybody. So just be careful where you invest. Don't be too greedy. Whatever I recorded in this video is not a personalized financial advice. I just wanted to give a few updates, like what to look forward to few coming weeks in my perspective and what I'm doing. But please do whatever works best for you and according to your own financial situations. I hope this video helps. Please give my video a thumbs up. Please subscribe to my channel if you haven't already. And I would love to hear back from you. Please comment in the comment section below to give your opinion. It'll be nice to hear, whether it's positive or negative, doesn't matter. Just give me your thoughts and let me know how I can improve. I know I can improve because I'm not a very good YouTuber, as you can tell. I don't know how to edit videos very well. I'm not very disciplined with schedule. I don't record videos sometimes for weeks, sometimes for 10 days. But when you're involved in the stock market, I'm supposed to give a daily update, but you need to have some time for that. But sometimes I do have time, but it's just, I feel like, everybody knows what they're doing. So please let me know if you would like me to give a daily update or a few times a week. I would try my best to incorporate that in my schedule. Please enjoy your day. Let's see what tomorrow brings in the market. Goodbye and good luck out there.